Hello, this is Chrishena Stanley, owner and broker of STK Property Group, and I am your hostess of Always Bet on the House. Thank you for tuning in. We are so fortunate to have here today Claudine West, Mortgage Maven, who's going to give us the inside scoop on everything we need to know in order to own our home so that we have the ability to always bet on the house. So we're going to start off by saying the dirty 5-letter word, rates. How are you, Claudine?
I'm great.
Thank you so much for being here today.
Thank you for having me.
Oh, it's our pleasure.
It's an honor and a privilege to be here.
Thank you. So we just want to dive in. So you have 30 years experience in this business, which is amazing. So you've seen it all.
I have seen it all.
You have seen it all. The highs, the lows, the good, bad, and the ugly, mortgage fraud, everything.
Yes.
ugly. And we survived. And then you can tell everybody that we survived it all,
yes,
right?
We did. Yes, we did.
Thankfully.
Amen.
So now many people are hesitant because the rates. And I think the misconception is that a lot of people, of course it was nice to have the rates during COVID to be so attractive, but that's because we needed something to boost the economy because everything else was completely shut down.
Exactly.
So that was that was an anomaly because it'll never happen again.
Post-pandemic anomaly.
Will never happen again. So what do you have to say to those people who are beating themselves up because they couldn't take advantage of that opportunity and are sitting on the sidelines because they think 8 or 9% is high, which I think is actually pretty normal. What do you say to those people, and what do you think about the rates and where they're going or where they are?
Sure. So over the course of the last 30 years, if you take an average, the average rate would be about 6.75% to 7%, which is exactly where we are right now. It's a very healthy rate,
very average healthy rate. So that's where we could. So people should be very confident and comfortable buying a home with the rates where they currently are.
Of course, if you can afford the payment. With rates being where they are, you can always refinance.
Right.
Getting in the door
is most important.
Is most important.
Correct. And then as far as here, because I see, everything in real estate, it really does come down to the actual neighborhood. But but I think a generalization, I don't see prices going down anytime soon here because Vegas is so attractive to so many different feeder markets, especially like Los Angeles, where these prices are very attractive compared to what they're coming from. And if people now, those people that did get in or refi during those great COVID rates, they're not eager to sell because they have a very affordable house payment. So I don't see the market crashing or going down
I don't either.
A tremendous amount, right?
I don't either. And recently, I'm still experiencing, from what I'm being told, my buyers, they're having, to compete with multiple offers.
Right, yes, because inventory is still low because if you don't have to sell and you can't find anything to, vertically move up to and you have a great rate, why sell? So inventory is still not that high.
No.
People are still having a good house. There's still competition and it sells relatively quickly.
It does indeed.
See, that's awesome. So people stop sitting on the sidelines.
Exactly.
The Mortgage Maven herself is telling you to get off your butts and get into a house.
Get off the fence, people.
Right? Because there's nothing like owning your own home, right?
Absolutely.
You're building equity. You can draw from that equity in times of emergency or when you need to, you want to renovate or anything like that.
Right. Statistically, I just read something very interesting. Homeowners have 10 times the amount of net worth renters.
Yes. Isn't that
10
so?
times.
10 the multiplier.
Yes.
10 times.
Yes.
That's the easiest way to create savings in your life.
Absolutely.
Is through owning your home ownership. And don't you agree that the American dream was built off of home ownership and owning real estate?
Absolutely, 1,000%.
Yes.
It is the American dream.
It is, absolutely is. I don't think that's dead at all. I know now some people are a bit scared to dive into the market and make that commitment because now, people are so transient and they get job transfers and this. So they're afraid, like if they buy a house, wonder if I have to move in a year because I have to change my job or I feel like changing a career or what. What do you say to those people who are like, oh, a house is going to just tie me down and I want to be free?
Well, honest to goodness, if you know that you're only going to be in Vegas for 1 to 2 years and you may be transferred.
Right.
Okay. Then maybe renting is for you. Homeownership's not for everyone.
Absolutely.
Okay. But if you are certain you're going to plant roots here and the home that you buy, you're committed to being there at least 3 years, 1,000% worth it.
1,000%. Even 3 years. Even at 3 years, it's worth it because you still have an opportunity to build equity.
Correct.
Isn't that amazing?
Yeah, absolutely. But of course, like you said, there are transient situations.
Right.
So.
But you think at least 3 years, it's worth looking at a home and having ownership.
Precisely.
Awesome. Yeah. See, that's fabulous. I love it. And sorry, Gene can cut this out. Okay, so should we go on to the next topic, talking about people like the strippers and?
Sure.
Okay. So I know that a lot of people are, especially people who work in the adult entertainment industry, or if they work in the hospitality industry, they do make great money. And they do make consistently great money. However, because, even when the economy's down, everybody wants to stay entertained in one way or another. Whether it's adult entertainment or, going to see Cirque du Soleil or whatever. Yes. People will stay entertained and keep themselves entertained to keep laughing through the bad times.
And how do you buy homes?
Right. When you're when you're getting cash and you don't really have it, when it's not, documented, you don't get a W-2 and you're an independent contractor.
Correct. So there are bank statement programs out there where I can use 12 or 24 months worth of your bank statements.
Wonderful.
I evaluate all of your deposits. So it is important that you're making consistent deposits.
Okay, fabulous.
Especially if you are, say, an adult entertainer, dancer, you make the consistent cash deposits.
And that will count.
And that will count.
Fabulous.
Absolutely. And then I average it over 12 or 24 months.
And that's how you get qualified.
And that's how you get qualified. On this type of program, though, you would need 15% down minimum.
Okay.
Sometimes 20%, but the minimum would be 15% down on a bank statement program.
Okay, wonderful. And that's not bad because on a conventional loan, it's usually 20%, right?
Actually, you can buy a home using a conventional loan with as little as 3% down.
They have 3% down conventional?
3% down conventional loans,
Oh my God. See, I thought you had to do FHA to get the 3.5 with the mortgage insurance. But
you can even do a 3% down conventional loan. So think about it. You can.
That's awesome.
With the conventional loan limit being 805 currently, you could buy an $830,000 house with 3% down. So that's $25,000.
That's fabulous. Yeah. Isn't that fabulous? I didn't even know that. Mm-hmm. I'm learning something new. So 3% down conventional. Yes. And then once you get into the jumbo market and the higher price point, so anything over what price is considered, you have to go into the jumbo
so
loans.
806,500 is the conforming loan limit.
Okay.
So 806,500 to $1 million, you could buy a home with as little as 5% down.
5% down?
Yes.
Up to $1 million? Up
to $1 million. Of course, you need great credit and lots of reserves.
Right. But it is available.
It is available.
Right. So that's motivation, guys, to work on the credit because 5% down that's nothing.
Yes.
That really is nothing to finance. And those rates, at those rates, what are those?
They're going to be higher than your, of course, than your conventional conforming.
But nothing crazy.
Nothing crazy.
Higher like what, 8%?
I would say mid-sevens. But you do need, of course, good credit.
Really stellar credit. So, of course, all these things that we're discussing are if you have optimal credit. But still, it's still a great opportunity. Yeah. Even if you don't, you can fit them in, but they just may have to put a little bit more down or whatever, depending on their situation.
Correct.
But I was, just like we were talking before, there have been, and not too far in, the distant past, double-digit mortgage rates. There was at one time, up to 19%.
Yes.
And people were buying homes.
Yes.
And they made a lot of money buying those homes.
They sure did.
Right? Exactly.
Yeah.
They built up a lot of equity buying those homes.
I remember my parents bragging that they had They actually obtained a mortgage at 18%.
And they were happy about it.
Exactly. Of course, it's back in the 80s.
Right, yes. But I remember the 80s wasn't that far away, you know?
It really
so I
wasn't.
guess, the point is that people should not be so focused on the rates. Of course, it's great to get, the lower the rate, the better, of course. And that's the goal.
Yes.
But don't let, 8 or 9% discourage you from jumping into home ownership.
Correct.
Because
you're renting, you're still paying a mortgage, you're just paying somebody else's.
They're the ones that are going to be able to pull out the equity.
Exactly.
Because once again, 10 times.
Yes.
10 times.
10 times
more worth than renters.
Renter.
10, not 5. 10, baby. 10. This is how it looks. 10. This is how that looks. That is that fact really drives it home as to why it is so necessary. I know, it's like, darn, that is a lot. Like,
totally.
It really makes you feel stronger, and it really makes you feel like you have security. And at the end of the day, you're home. Not to use it as a bank, but it is there in times of emergency.
Correct.
So, and renting, you don't have that. And what you notice is that the rental rates right now are through the roof.
Oh, they are.
Right? It's ridiculous.
The leasing rates are just
insane.
Upward bound. It is.
Even like for $5,000, you get, a 3-bedroom rental in a decent neighborhood, but $5,000 a month. What you would pay for, and the space is not nearly as what you'd get for a home paying $2,500, $2,000.
Right. For $5,000 a month, you can buy a $700,000.
A $700,000
minimum
home.
down.
Right. So look at that. Yeah. So it really is worth, at least discovering if you can be qualified, if it's right for you. Claudia could take you through the whole.
Yes.
Is it Claudine or Claudia?
Claudine.
I knew I was going to say. I was like, I know it's more beautiful.
It's okay.
Okay, Jean can cut that out. No. All right, sorry. Let's start over again. I'll start. Yeah. All right. Yeah.
It's all good.
No, sorry. You have to talk to Claudine so she can tell you if this is, the best suited for you.
Right.
Because you'll get an idea of their lifestyle. You'll see what their savings are and get a whole, feel for what their lifestyle is if it's suited for. Because home ownership is not for everyone.
No, it's not.
It's not. Some people don't want to fix anything, don't want to change light bulbs. If you're not willing to maintain something, then maybe you should not be a homeowner.
Correct.
Because it does take maintenance.
I would like to share something with you. If your intention is clear and you want to buy a home, and you follow the steps on my path to purchase that I give you, you will be a homeowner.
I love it.
Clear intention.
Yes.
Absolutely.
From Claudine West, 30 years experience, the Mortgage Maven.
Yes.
Our Carmen San Diego. Fabulous. Yes. You've got to rely on her.
I can support you with helping you fix your credit. I can help you set up a budget so that you can save for your down payment. I can explore down payment assistance options for you.
Fabulous.
There are so many things that we can do to put you on the right path to home ownership. You just have to set a clear intention.
Right. Be honest.
Yes.
With all of your information.
Yes.
And that you can tailor an opportunity to whatever they show you.
Exactly. And I have a message for Gen Z. Quit spending your money at Starbucks. Or buying
$6 coffee, that's way too strong.
Or $20 breakfast at Earth Cafe 4 times a week. Okay. If you cut all of that out, you'll save $6,000 to $8,000 a year.
Right. Isn't that fabulous? No, it's the truth. Like, that's me. I started doing that because I was like, oh my gosh, like, seriously, it's ridiculous. I went to Starbucks to get breakfast a few mornings ago, and it was just for my mother and I, and it was like $25. And I'm like, it's a bagel and 2 coffees and like a sandwich.
Right.
They were really nice people there, but I'm like, $25? Are you kidding me?
Exactly.
I think I put it back. I was like, can you take this back, please?
I want to circle back to a client that I had this week. So again, this is a bank statement program. So business owner owns a small restaurant. Last 2 years in a row showed negative $70,000
earnings
on their tax returns.
So he's at a loss.
2 years in a row. But the bank statements show an incredible amount of deposits.
Oh, isn't that one? So he was still able to get qualified even though he reported a loss.
Yes.
Because the bank statement showed what was coming in.
Right. I don't use tax returns. So,
oh my God, dude, that is really huge. That's huge. So you use the bank statements or have way more weight than the tax returns.
Correct.
So don't worry if your tax returns are showing a loss. If your bank statements make sense.
Absolutely.
And it's showing,
consistent deposits.
Yeah, because you could be paying yourself $500,000. That's why you're at a loss.
Yes, exactly. So gig workers, freelancers, adult entertainment
can get qualified.
Restaurant owners.
See, isn't that wonderful?
It's possible.
Yeah. So we're encouraging you, and she's encouraging you. Yes, she can work with you and show you step by step how to get qualified and be in home ownership because they deserve it. We all deserve the opportunity to own a home and live the American dream. Absolutely.
1,000%.
Yes.
So
I love it.
I want to give a shout out to the veterans too.
Yes.
They can buy homes with nothing down.
Yes. Yeah. I love it. I mean, VA loans. I mean, they can up to. I know. Once I worked with a veteran that bought an investment property. He lived in one of the units. I think it was a fourplex, and it was like over $1 million, and he zero down.
Zero down.
Isn't that amazing? They absolutely deserve it.
1,000%.
Yeah. So veterans, please take advantage of that opportunity. You could put zero down up to, I know it was up to $1 million. What's the cap on it?
$2 million.
Up to $2 million. Like
not necessarily 0% down at $2 million.
But you can.
I have financed $1 million purchase for a vet with zero down.
So, isn't that amazing? So please don't allow yourself to be discouraged by rates. It's not an ugly word. It's a fabulous word. Rates, baby. We got to give it a new spin. Put a spin on rates.
Absolutely.
So don't be discouraged by rates, and don't be discouraged if you're in a cash out business, an independent contractor business. Claudine can tell you how you can get qualified and make it a fun experience.
Yes.
That's why we want to make everything in real estate seamless and easy and a great experience for the buyer so that they enjoy it and want to do it again and again and believe and believe in home ownership.
Absolutely.
Thank you so much, Claudine. Can you please tell our viewers where they can find you and they can get qualified to get a house so they can bet on a house?
Yes, absolutely. So Claudine West, your mortgage maven.
I love it.
You can reach me at 702-498-8305. You can find me on Instagram, Claudine B. West, Mortgage Maven. Same as Facebook.
And you can find us at Always Bet on the House. Thank you for tuning in to another episode of Always Bet on this House. I hope you had a great time and got some incredible information about the mortgages.
Thank you so much for having me.
Thank you, Claudine. I appreciate it.